Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is November 29th, 2017, and today is Wednesday morning. So let's take a look at the economic events of the day. We're going to have an all-day event with the OPEC meetings. OPEC stands for Organizations of Petroleum Exporting Countries, and that's really a meeting that they have every so often in regards to the output of oil. Okay, it's really an important event. Okay, kind of hard to really digest some of the information that will be coming out with the news and so on and so forth. So it's going to be kind of choppy trading today. We generally have our weekly oil inventories today. You see that coming out at 6:30 South African time. That's the end of the event. But you know, in light of the OPEC meetings, the major part of the day is really the OPEC meetings. So you got to keep your ear to the news and see what's going on if you do decide to trade oil. But we'll take a look at that in just a moment. And then throughout the day, we have at 4:30 South African time pre-GDP for the United States. That's gross domestic product coming out. That's a quarterly number. No big surprises there. I don't think the market's going to, react tremendously to it, but just know that it's there. And then at 5 o'clock, Governor Carney will be speaking, and that should affect the GBP. We'll take a look at that as well. And then at 6 o'clock, Fed Chairman Yellen will be testifying in front of Congress. So that's an important event as well. So altogether, these are all very important events. It could be a non-event as well, just because things are factored in the markets. But let's see what's been happening in the market. So we're looking here at the Euro USD, and it's a little bit of a difficult trade to tell you the truth, because we sold off yesterday and we went below our 1880 level, and then further below our 1860 level. Okay, and was finally settled at 1840. 118.40 that is, and now we're bouncing off of it a little bit. So just it's had a tremendous rally. We retraced about 100 pips. So at this stage, I would say that we're just trying to find a new trading range for us to be in, as we had this massive rally from 115 to this 119.60-ish level. So we're at this point where was a previous resistance level, as you can see here. That's one resistance, that's a second resistance, and ultimately a third support at this 1838-ish level. So I would keep an eye on this, on the upside to see if it'll, close it up and continue rallying into this 1880 level. And with the markets being so strong, with the equities markets being so strong, there's no question that we could see a reversal in the Euro USD. Now, looking at the GBP USD, it finally took off. Okay, this is why it's really hard to trade this at the GBP USD, because we weren't going anywhere on a Monday. Okay, we weren't going anywhere on a Tuesday, and finally we just took off late in the afternoon. As you can see, this massive rally into this 133.8-ish level. Now, we're going to be heading closer to this 136-ish level, and that's really our next major resistance. Okay, so I would keep an eye on this. All right, maybe buy at some point where it retraces. Okay, clearly 133.60-ish level would be a really great buy, but I don't think it's going to retrace that far back into the anticipation that's going to continue up going higher. Now, it has a little bit of a resistance level at this 133.99-ish level, so call it 134, but keep an eye on that. Okay, because if it does rally into this number, it could definitely close in this 136, and just keep an eye on that to see if that momentum continues. Looking at the USD ZAR, the ZAR getting stronger. Okay, we continued our slide versus the dollar from 1390-ish level to 1360-ish level, as you can see here. We're settling at close to a previous resistance level, which is subsequent support right here. So if we don't break this with a bar, with a candlestick on the downside, I think we'll actually be bouncing off of this. So keep an eye on that as well as this unfolds. Looking at gold, not doing much on a Tuesday vis-a-vis the rest of the markets, and you see that we're like kind of consolidating here. It looks like it wants to take it up higher, but it just resisting it, but it looks like it's going to break out. Okay, higher lows. Looks like it's making a wedge formation, and kind of flatlining, but really looks like it wants to go. So keep an eye on this today. If it does pop, it can definitely go up higher. Looking at oil, now oil is pretty much flat line here at $57 a barrel. We hit 59-ish level, okay, which we haven't been in a very long time, almost 2 years. And, there's not much to say about this because, ultimately it's what the price of oil is much dependent on um, the demand for oil and the amount of output that they're actually producing. So, it's not as much about electric cars and solar panels and stuff like that. It's more the price of oil is more related to geopolitical issues around the world. Oil is not going anywhere anytime soon. Maybe in 10 to 15 years, it's going to be, phased out into other sectors in trucking, etc. But ultimately, we're still very dependent. We're an economy that's very dependent on oil. And as such, I still think that we could hit $61 and close in this continuing rally. So keep an eye on that as well today, especially if you see that there's some bullish sentiments, okay? Because we're hitting a previous resistance level, subsequent support as well at 57.65 here. So I would look to actually buy this, maybe even small, just to see how it's, relating and how it's responding to what the news is coming out, and then potentially build a bigger position if I see that it's working towards us. Now, looking at the Dow Jones, this is a monster, okay? We mentioned this several times. I mentioned it almost every single day that basically this is the bullish season that you could possibly in, okay? It's the most bullish season. There's nothing else for me to say. Between Thanksgiving and Christmas, very positive news comes out. People are buying, consumers are responding to the markets, and they're purchasing goods, making companies like Amazon, one of the biggest companies in the world. And this is all consumer related consumption. And you could see this clearly that this is breaking out to all-time highs, 23,800. Just to give you a perspective of it, this looks like it's continuing its rally on the way up, okay, not giving up. And it looked like it was going to sell off. They make it look like as if it's about to break down, just like it did here with this flatlining, but it broke its high of 23,600 and then we just went off, okay. It becomes like a rubber band effect, okay, when you're just waiting for it to pull, and then finally you release it and it just takes off. And this is exactly what has happened with the Dow Jones. Now we're on chartered territory. If I look at a monthly chart even, you could see that we're in literally all-time highs. So catch it if you can. Don't chase it, but wait for some sort of pullback. Look for opportunities in the morning, okay, of the U.S. times, which is about 4 o'clock South African time. Maybe it sells off initially as the market opens, and then it goes back to its all-time high. So a lot of opportunities for day traders trading the Dow Jones. Looking at the DAX as well, we're above this 13,000, and we reluctantly, like the GBP, we reluctantly wanted to break above it, and finally we did. We're trading at 13,145. So this could also continue to taking off, and I'd like to see that happen, since for the U.S. markets to make all-time highs, it would be utopian for the European markets to continue making all-time highs as well. So just indicative of the general atmosphere in the world, that things are strong, okay, that the economies are strong, that the equity markets, corporations are strong, and there's an expansion in the world in terms of investments. So I'd like to see some sort of continuation here, and that's what I would be looking for. This is Fred Razak. I want to wish you guys a great trading day. Thank you.